Welcome to this week's video market commentary, and we want to focus today on midterm elections, right? Because by Wednesday of this week, we should have, presumably, a fairly accurate assessment of who controls Congress, both from the Senate and the House perspective. And I want to preface this entire commentary by saying that Alisha and I here are not political experts, nor are we biased to one party or another. Our job is to simply look at the data very objectively and try to extrapolate what may happen from a potential stalemate in Congress, from a potential political party win in Congress, and kind of how that may translate into capital market expectations. And I want to start today's discussion, but first and foremost, looking at our research piece that we've released. We've released it numerous times in the past, but we've updated it since, that tracks every midterm election year since the 1930s and tracks overall volatility, return profiles, and all the items associated with it. So, Alisha, I'm going to turn over to you on that piece. Can you walk us a little bit through the experience from a historical standpoint of what happens to markets during midterm election years?
What we found when we ran this piece is that during the first 3 quarters of the year, returns are rather neutral. So when we look at this piece, the average returns range between -1% and 1% during those first 3 quarters of the year. And then in the fourth quarter, we're seeing a pretty decent bounce in the S&P 500 to the tune of around 6% in Q4. Also looking at the volatility piece, we have noticed that we experience greater volatility during midterm election years than during non-midterm election years.
It's as if people are scared of politics sometimes, right?
Yes.
Investors specifically. So to paraphrase that, right? Neutrality, the first, second, and third quarter with added volatility. That has been a recurring and significant segment of each midterm election year since the 1930s. And the reason I want to stress that in that sense is the fact that every time we're in this scenario, it tends to feel different. We want it to feel different. The reality is we've been here before, numerous times in the past. And the volatility this year, for lack of a better term, right, has certainly amplified things. Walk us a little bit through that notion of, wanting it to feel different, not being different. Yet we have all these other exogenous components that have added to volatility this year. Is that coincidence? Is it not coincidence? Kind of help us understand that a little bit.
Sure. Yeah, there's a lot of different instances that are causing a lot of volatility this year. We have geopolitical tensions in Russia and Ukraine, political tensions with China. We have a surging inflation, not just in the US, but across the globe. We're seeing very hawkish monetary policy across the globe. So a lot of different things are feeding into this heightened volatility. But this is a cycle that repeats itself over and over. So we do need to take that into context.
Yeah, seasonality is not an uncommon component of markets. And what Alisha just described is the seasonality factor of midterm election years has lived its way fairly closely to most other midterm election year cycles since the 1930s. Really critical to point that out. Shifting to the second page of our analysis here and kind of tracking more of that volatility intra-year, but also on a forward-looking basis, right? Markets, stocks tend to price themselves rather on a forward-looking expectation rather than what's happening in the exact current environment. Alisha, what does the data show us, going back to the 1950s in this case, what happens intra-year from volatility? And what does that look like on a forward-looking basis?
Yeah, so intra-year during midterm election cycles, we tend to have greater peak to troughs. So on average, about a 17% intra-year decline during midterm election years. But then when we look forward, 1 year return later are significantly positive. In this case, on average, about a 30% positive return from that trough.
That's amazing. Yeah. So to put that in today's terms, the downside we had peak to trough in 2022 resembles within 3 to 4% the exact cycle of intra-year declines in previous midterm election years. And what the data showcases in those previous years is the return 1 year later, on average, is roughly 31% higher. So again, I know we want this to feel different this time around because of other factors, whether it's inflation, monetary policy, geopolitical tensions. The reality is we have been here before many, many times in the past, and we are resembling that seasonality factor. And to end today's commentary, just providing some estimates on kind of the geopolitical and the national political landscape, rather. As of 12 hours ago, the Senate is in a toss-up. About 56 seats are projected to go to the Republican Party, and about 54 seats, rather, the Republican Party, and about 46 seats to the Democratic Party. Still a toss up, right? That split at 50-50 is very much plausible as of right now. Whereas on the House side, Republicans are expected, roughly 80% chance, to have control of the House. Here's where this becomes even more important. The presidency, right, which was 2 years ago under Democratic leadership, often when that happens in that first year, the House and Senate tend to also follow the same political party. 2 years later, during midterm elections, we see a shift where the other party controls Congress and one controls the presidency. This is not uncommon. There will certainly be discussion topics around this across media outlets, yet this is a very, very common occurrence to happen during midterm election years. What's more important is if it does happen, it will introduce the notion of potential stalemate in Congress, stalemate in legislative policy. And who likes that stalemate? Equity markets. Equity markets tend to enjoy the stalemate from a legislative policy standpoint because it kind of neutralizes the noise that may come out of Washington. So we'll be paying very close attention to this data over the next couple of days. Certainly by Wednesday night, we'll have a great idea of what's happening on the political landscape here in the United States, and we'll keep you apprised of it as we learn more. Thank you.